Hi traders, thanks for your patience there. Welcome to the Daily European Open webinar with myself, Adam Howson, your account manager. Today is Tuesday, the 8th of the 8th, and we'll look at discussing the market events that have happened over the past 24 hours, and then just do a bit of a forecast for the next 24. Short general advice warning before we begin. Forex trading involves trading risk capital. The following education session is not to be treated as personal advice. And ForexCT provides general advice only that does not take into account your personal needs or circumstances. Okay, let's just have a look at the market events coming up today. It's a bit of a quiet day actually happening today with no sort of major forecasted announcements of high impact. Although we do have OPEC coming into focus at the moment with the oil, with CL, obviously the crude light and Brent. We'll discuss that in just a moment. Coming out tomorrow with the CMY Consumer Price Index at 11:30, and also on Thursday with the RBNZD interest rate decision. Kept on hold for a while now at 1.75%, with 100% certainty, with a lot of analysts saying to keep on hold at 1.75%. Obviously, we've got a short news conference on policy statement from Wheeler after that. And then we'll look ahead to what has been touted as a high impact announcement. Look, really sort of will be closely watched, but probably unlikely to move the market in any great degree or fashion. But that's the RBA's low before House Economics Committee in Melbourne, just giving a broad sort of policy outlook on the AUD. But more importantly, we're coming up to USD Consumer Price Index for July year on year, and also for ex-food and energy as well, both at 1.8% and 1.7%. So we'll just have a look at the markets now leading up to the opening bell of the European Open and London Open, at 5 p.m. So we've got the usual pairs which we have a look at: the AUD USD, a pound against the US dollar, euro against the US dollar, USD against the yen, gold, crude oil, WTI, that's CL on your platform. I'm going to have a look at also the S&P 500 or XJO on TradingView, and the pound against the yen. Okay, all on daily time frames. So every candle that you're looking at the moment is, in a sense, a daily time frame. So we're having a look at, a few sort of top things to know on the market today. With OPEC at the moment, we'll discuss that first on oil. We're having a look ahead to a highly anticipated meeting of oil ministers over the next 2 days from OPEC and non-OPEC producers to assess how the group can increase compliance with production cuts that begin at the start of the year. It's a 2-day gathering that kicks off in Abu Dhabi. We'll discuss members' compliance levels to agree on global production. Just on that, oil prices have remained relatively consolidated over this period. They were on the back foot ahead of the meeting. US crude was last at 48.92, down 66 cents. It has sort of come up a bit to 49.25, and Brent slumped to 68 cents to 51.74 a barrel. Broadly speaking, we have a look at, the major focal point as well being the US dollar against most of the majors here. Two of the major issues sort of facing the US at the moment are the debt ceiling. Obviously, talks about raising the debt ceiling, and the impending rate rises that should be on the cards, but there is a bit of a dovish stance towards that. We did see the dollar that was a shade lower yesterday. It did make sharp gains in the previous session, as we saw from Friday's stronger US jobs data. But the dollar index generally, which tracks the greenback against a basket of sort of 6 global peers, including the euro and the pound and the Aussie, was down a little bit, rallied roughly on Friday, but it had its biggest one-day gain so far this year. But we've really sort of seen a bit of a stalemate in relation to the US dollar at the moment. So really is a lot of talk about raising the debt ceiling. Broadly speaking, that is a really critical issue to look at when you're looking at the strength of the US dollar or the weakness, that might ensue from indecision in the market. So if we see the market sort of largely taking a, or if they reach a stalemate in terms of that agreement to actually, raise the debt limit, then we could see the US sort of broadly tailing off and bearish pressure ensuing. Also, last we had a look at likelihood of future rate increases in the US, and with a 40% certainty of September that the rate rises were going to occur. So it's not a huge result, not a huge probability that it will occur. A lot of analysts or senior analysts are saying December rate rise is quite likely, but the predominant theme here is more a dovish stance, which means that the Fed isn't looking with an increased urgency to raise rates. Now, if they're not doing that, then obviously, investors choose to park their money elsewhere, because the higher the interest rate, the higher value attached to a currency. So broadly speaking, we had that NFP data coming in on Friday, which was, bullish for the US, but, it was kind of momentary. We had a broad, sell-off of the USD JPY when that happened. And now we can see, bearish pressure ensuing. We'll just go to a daily time frame on the USD JPY here. So we had that big jump on Friday because the NFP, but now we've got sort of, a bit of selling pressure coming back into the market, probably reflecting the true value of where the US is at the moment, not just in relation to that debt ceiling and also the likelihood of interest rate rises, but bear in mind that there is a lot of political turmoil in the States at the moment. Approval ratings for Trump have slid to around about 30%. 60% of Americans and 70% of Americans view Trump as, not caring and being dishonest. Okay, and that was, quite a change from the optimism that came in when Trump took the podium. So we've got the Russia scandal pertaining to that as well. And bear in mind that there's been a lot of tax reform, obviously, and we're talking about the debt ceiling as well, but there's a lot of, policy change which has failed to take effect under the Trump administration. Not only, even though the majority of Republicans still support Trump, there is a lot of backlash and a lot of indecision. Okay, and that is causing a lot of instability in the, broadly speaking, in the US dollar. It's really shaking the confidence. If you have a look at the local markets on the Dow and the Nasdaq, they've reached record highs. Now that's in opposite to what we're seeing on the US dollar, but those sort of record gains on the Dow and the Nasdaq have broadly been about very good at company earning reports, particularly in the tech and banking sectors. So that's really driven those record highs. We concentrate more on the currencies here at Forex City, but you should be having a look at the Dow and the Nasdaq as being good buy opportunities at the moment. So yesterday we saw global stock markets were mostly higher. Obviously better than expected company earnings as discussed on the Dow and the Nasdaq. In Europe, shares inched up as well as basic resources and energy stocks helped the continent's benchmarks build on the previous week's sizable rally. And we're still looking at further gains on S&P and Dow at the moment and the Nasdaq. But when we come to the currencies, broadly speaking, on the US dollar, we're seeing the emergence of a daily bearish candle here at the moment. Technical entry point on this one as well suggests that, we're coming up to a bit of a unsustainable extreme on the stochastics indicator here, indicating that some, bearish pressure might ensue on the otherwise weak US dollar against the yen. Correspondingly, we're seeing the best performer of all being the euro against the US dollar. Bit of a quiet night overnight, not much activity in the market, but we come into a bell curve kind of around about the middle of the week or even beginning now as early as Tuesday. So the forecast at the moment for the euro against the weaker US dollar is further rise to levels of 1.19 and 1.195 in extension. Also the same with the pound as well. We've had some, broad selling pressure ensue after that interest rate announcement last week where they kept rates on hold at 0.25%. But again, we're seeing sort of the emergence of a bullish candle now, and a lot of traders are going long to levels back at 132. The Aussie is a little bit harder to sort of define. It's very sort of resources based. We have seen a little bit of a crossover happen here at the moment on a daily time frame. We're starting to see sort of the pivot level being tested here at 78.90, and we saw some broad selling pressure overnight on the Aussie. No major data coming up to affect that pair this week, but the Aussie trades within a very tight range. So look, at the end of the day, one of the only main profitable ways to trade this pair would be maybe to have a look at overbought, oversold levels on stochastics here. If we were to trade on that information, then we're seeing sort of an oversold level existing here. And by rights, we could see on the backbone of the weaker US dollar that the Aussie may sort of approach, levels of 79.50 or even 80 cents in extension. So we talked a little bit about the weakness of US. If that were to happen, then broadly speaking, gold would be seen as a good buy opportunity, seeing as it's inversely correlated with the US dollar. Traders are looking for targets of 1270 and 1275 in extension. Talked a little bit about oil as well. S&P continues to sort of very narrowly trade within this tight range. Look, it might represent in this normal pattern a good buy opportunity. We're seeing quite some bearish activity today, so it might become attractive for investors to come back into the market and sort of yet again rebuy that pair at levels of 572 and 573 as well. So we look ahead to one of the main events this week being the inflation data from the US. Now, US inflation data remains relatively low. That announcement's coming up on Friday at 22:30. You've got two different readings here, one for the year-on-year general price index for July, and the other one being for ex-food and energy year-on-year for July as well, both at 1.8 and 1.7%. Now, bear in mind that no one ultimately knows sort of exactly what the figure would be, but historically, if we were to see higher than expected readings on inflation, normally that should be taken as bullish for the currency, because a higher level of inflation indicates a high propensity for that nation to raise their interest rates to combat the high prices. So think of it as prices increase, prices getting out of control. One way to actually stifle that peak of activity or peak of inflation is to raise prices to stifle demand, and therefore prices come back down. Okay, so it's very important, not just for the US, but also for our own economy and our own government, to keep inflation in check, to make sure that the economy doesn't become overheated and prices, skyrocket. So if there is higher than expected inflation readings, normally taken as bullish for the currency, but these forecasts have been pretty accurate at 1.8 and 1.7%, and they were pretty much bang on with the previous announcement at 1.6 and 1.7. So we'd expect to sort of see that sort of follow suit. If you're not sure sort of either way which will go, we covered some entry order strategies last week on the non-farm payroll. And yet again, you can actually go in and sort of trade those announcements on entry orders as well, for which we've got other webinars on entry orders on our YouTube channel. So, folks, that's just a short market update today. Just a general synopsis there. The main thing to be paying attention to probably today would be the strength of the euro against the US, and probably the weakness of the US against the yen. Correspondingly, we're seeing a little bit of resurgence in the Aussie as well. Bear in mind, we've got a lot happening with the OPEC meetings as well, still continuing. So if you have any questions about those events or anything in particular, please get in contact with your account manager. Bear in mind, we have the SMS service as well. So if you're not on the SMS service providing you trading setups to your mobile 2 to 3 times a day, please let us know and we'll discuss ways in which you can actually get on it as well. For the time being, thank you very much for your attendance, folks. Appreciate your time, and we look forward to seeing you at the next webinar tomorrow. Thank you.